Good afternoon, good evening, good morning, whenever you're watching this. Welcome to session 3B. Now we'll be diving deeper into technical analysis. We'll be going deeper into technical analysis, and although I arranged chart patterns before trends and structure, but I'll be teaching structure and trends before chart patterns because one of the poisons that they teach newbies or they teach you guys is they teach you guys chart patterns before they teach you trends and teach you structure. Therefore, you start to look for chart patterns in the wrong places. But what I'm going to show you is going to cancel out all of that rubbish and possibly give you the antidote to picking the wrong direction, because I can tell you, no matter how good your analysis is, if your direction is wrong, you're going to lose. If you're going against the trend every time, you're going to keep losing, no matter how accurate your analysis is. I can tell you, nobody gives you an award for being the best analyzer. You only get rewarded for getting in successful trades, making profits, and making your withdrawals. So people even analyze so much they become forex professors, but basically they are just technical analysts because they don't make any money, and that's not what you want, because there's no award for that or the best demo trader. Come and do it on a live market. Come and let us see you actually make money, and that's what matters. Therefore, if you follow me and you master structure and trends, and then you apply any other thing you want to apply, guess what? You'd be unbeatable. You'll be so shocked how much your win rate and your accuracy will jump up. So let's jump to the chart very quickly. I want to look for a very virgin chart that I really haven't used yet. So let me just jump to a random GBP chart. Excuse me. So very good. I've shown you guys candlestick patterns and candlesticks, of course. So bearish candle, bullish candle, bearish. Yeah, very nice. Now what I want to show you now is trend and structure. Trend and structure. So basically, a combination of candlesticks will form patterns, right? But a combination of, should I say combination of patterns now? But a longer combination of candlesticks will form the market structure and will form your trends. Let me give you an example. So we have two types of trends in forex or in any kind of market. In technical analysis, we have two kinds of trends. We have an uptrend and we have a downtrend. Actually, it's three types of trends actually. So three types of trends, three kinds of trends. We have an uptrend, we have a downtrend, and we have a side trend, also called a ranging market. Never forget these things. Never forget these things. Ranging markets. If you're a newbie, never forget them. If you're experienced, please pay apt attention. So we have a ranging market, and I'm going to show you all of these things now so you know what they mean and how to use them. So let me quickly draw something here. So how you know an uptrend is when you look at the market. That's why I say I'm not going to teach trend lines. So people teach you trends by drawing trend lines, and that is absolutely wrong. Yes, I'll tell you why. Because it's very subjective. Either ways, if you're a newbie, no need to confuse you by showing you what doesn't work. It's going to drive straight through to what works, right? So an uptrend is characterized by this. If you look at the market, you've seen that it moves in kind of waves or in legs. Now look at this. If you see a market moving in, I'll mark something just I'm coming. Something like this. This is just like a perfect structure, right? This is um this is your high. That's your high, and this is your low. This will take a while for you to master, but as you practice it, it's gonna come to you very easily. That's your high and this is your low, right? Now this is your higher high, right? And this is your higher low. Remember, this is your HL, higher low. This is your higher low, right? And this is your higher high again. Write it properly. It's your higher high again. And this is your higher low. So if you have a combination of high, low, higher, high, higher, low, higher, high, higher, low consecutively, you are officially in an uptrend. Now, conversely, if you look at the market structure, what you're seeing is prices moving like this. This is a perfect structure. You hardly see this every time, but this is just an example, right? You see price doing this. Let me show you something. So this is your low, right? And this is your high. That is your high, right? And then you have a lower low. Apologies for the break. Then you have a lower low, right? And then you have a lower high. Can you follow me? Lower high. Then you have a lower low again, and then you continue to have consecutive. I'm going to give you some laws to follow by. Consecutive areas, consecutive lower lows and lower highs, lower lows, lower highs, lower high. You are officially in a downtrend, right? So this is an uptrend, and this is a downtrend. Can you hear me? So if I give you a rule that you should only buy in uptrends and only sell in downtrends, do you think you'll be successful? Yes, but I'm coming. I'm not done. So now this is an uptrend. This is a downtrend. Now this is a sideways market. Let me show you a sideways market. It goes up, comes down, comes like this, up, down. Just there's no clear direction, no clear higher high, no clear higher low. It's just moving up and down. A fixed axis. Let's say, let me draw a line here like this. It's just moving up and down a particular fixed axis. That is what we call a sideways market. That is not a trend. So sometimes you don't even want to, if you're a trend trader, you don't want to be looking for trades within areas like this, right? When we get into smart money concepts, we think go into things like distribution, accumulation, and all those kind of things, right? But here at the basics, you need to understand that you have an uptrend, a downtrend, or a sideways market. So if you go to this chart right now, I'm trying to build a base for you to understand these things. So now I want to move to the 4-hour time frame because we'll have a cleaner structure there, right? So I want you to look at this chart and tell me, what do you see prices doing? I mean, from this point, look at it very closely. From here up until down here, what is price doing? Let's zoom it in. What is price doing? Price is making series of lower lows and lower highs, lower lows, lower highs. Although it's not perfect, but lower lows, lower high, lower low, 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 low. Even though it breaks once, but it breaks back and continues the lower low, lower high, blah blah blah. Right? Can you see that? So officially, price is in a downtrend here. Now I want to teach you something called. Okay, let me not go there yet. Before I do that, I want to show you something. Why is this thing scattered now? Anyways, I've already taught it and passed this, so just understand what I'm saying. So now, on each leg of this thing, on each leg, this up part here, this movement upwards for the uptrend, for the uptrend, for this part, for the uptrend. This is called an impulse. And this part is called a retracement. Listen very closely. Now we're getting into the real nitty-gritty. This part is called a retracement, right? So the same way, this is the impulse. No, let me I want to copy that. This is the impulse. Nope. This is impulse. This is retracement. Who asked you to copy this one now? Oh God, calm down. Impulse, retracement. Do you get it? So the continuation of the trend. Let me remove some of these things, they're not clean. So the continuation of the trend in its desired direction, that's the impulse. The smaller movement to the downside is your retracement, impulse, retracement, impulse, retracement, impulse, retracement, you understand? For the downtrend, it's the exact opposite, it's the inverse, as I like to say. So for the downtrend, the dominant move to the down, forget all these lower high lower, they're no longer accurate. Let me remove them. I don't know why they scattered themselves. Sorry, but they scattered themselves, so they may be confusing. So, but listen very closely. Listen very closely. We're about to break some myths here. The moment you can understand trend and structure, your trading is set. I'm telling you, no jokes. You can begin to form strategies off like water. So for your downtrend, this stronger move is your impulse. The smaller one, this one, is your retracement, right? Again, this stronger move that breaks this low is your impulse. The smaller one that goes, sorry, let me use this. The smaller one that goes back up is your retracement. This big move down is your impulse. This smaller move up is your retracement. And then there's this big move down, which is your impulse. And this is where Fibonacci comes into play. So if you check your tools, on whether you're MetaTrader 5 or even TradingView, you go towards, I think it should be, yeah, it's right here, this third one, 1, 2, 3. You see what they call Fibonacci retracement, right? Fibonacci retracement, the first tool there. So I'm going to click it and I'm going to draw something and I'm going to explain what it means. Now, Fibonacci retracement is used for capturing impulse and retracements. It's used for capturing impulses and retracements. Now, you're not always going to use it. You can see here, that's just 3 lines. That's not how it always looks like. Here, I'm using it to divide, to do accurate division, to find the center of something, right? Another thing you can use it for is for, nope, not that, not that. Okay, yeah. This is an actual Fibonacci. Let me zoom so you can see very clearly. So now, usually you want to have certain levels on your Fibonacci. What's this now? So you want to have certain levels on your Fibonacci, and what they call the golden level most times is 61.8 and 71.5. It doesn't really matter because I just want to use to explain something. I don't really use it to trade anymore, right? So the idea is this. See this retracement I'm talking about, retracement. It can retrace to different parts of your previous impulse. It can retrace this low and drop. It can retrace this high and drop. It can retrace here and drop. But a lot of times they say that the golden place it retraces to is around the 61.8 level, right? So some people actually use this to trade. I personally, I use my Fibonacci as a measuring tool, right? That's what I use it for, basically. So that's just Fibonacci. I just need to use to explain to you what the Fibonacci is used for. It's for catching retracement trades. So for example, when you draw that Fibonacci, you know, like, okay, this is the golden place, so you're expecting price to reject from that golden point, but I don't really do that, and you don't need to worry about it. So I've explained what impulse and retracement is. So this is your impulse, and this is your retracement. This is your impulse, and whatever comes next is the retracement. So then the one that continues the trend is the impulse. For the sideways trend, there's no impulse, there's no retracement because it's just moving sideways. There's no direction. It's basically ranging. It's a ranging market. Now that is for trends. So I've talked about downtrends. Let me look for an uptrend for you and mark it out. Yes, obviously. Excuse me. So this is basically an uptrend from, let's say, from this point up, from here. Yeah, from here up till this point is, excuse me, clearly an uptrend because you can see price is making consistent higher highs, even though it breaks sometimes. I'll explain that one shortly. Higher highs, and when I get to structure, higher highs and higher lows. It breaks for a while, makes a very short preliminary downtrend, but then breaks back into the higher high and higher low points. Does the same thing again, continues the higher high and higher low, whatever. So this was an uptrend, and you make way more success looking for buys in this period and actually trying to sell here, while you make more success looking for sells in this period of the downtrend rather than looking for buys in this period. Now that I've covered what a trend is and what the types of trends are, let's enter structure. Let's look at market structure. Now here we have to get very technical, so I need you to follow me very closely. right? Very closely. Now we're going to examine some laws of structure. So remember I said that price on a perfect uptrend, it moves impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement, right? But price hardly moves like this. This is a perfect market and it doesn't always happen. A lot of times you see things in an actual market, something like this. Impulse, retracement, impulse, it goes below it, continues, does this, something like this, then goes again, then does this, continues, then takes that one out, and then continues actually the impulse, right? But this is still an uptrend, and I'll explain why. Let me explain. So here's the law. Here's the law, right? For you to be in an uptrend, you need at least two. You need at least two breaks. Listen, let me show you something called a break of structure. So let me touch this very close. Let me go back to my uptrend and my downtrend example right here. So now remember, this is, let me take this off. Take this off. Now, remember I said that you have a high, a low, a high, a low, a high. Sorry, high, low, higher, high, higher, low, higher, higher, high, higher, low, right? And here you have a low, lower high, lower low, lower high, lower low, lower high, lower low, right? So now, before price can move and create a new level of structure, it has to break the previous level of structure, and that's what we call a break of structure, right? It's called a BOS. Now, I explain these things more in the smart money concept part, but this is what we call a BOS. Forget BMS, forget all those complex, forget chalk, change of card, forget all those ones. Those are just complex language. It's simply a break of structure, right? We're trying to make things as simple as possible for you. Here, you see what we have here, a break of structure, right? A break of structure, right? And then there is here impulse retracement. It will not, the next impulse will break the previous structure. The next impulse will break the previous low in a downtrend. For uptrend, the next impulse will break the previous high to show you that it's continuing that trend. So we have a break of structure here. This is a BOS, and it's the exact same thing happens here, and that's what we're seeing here too. A break of structure to confirm that it's continuing the downtrend, a break of structure to confirm that it's continuing the downtrend, a break of structure to confirm that it's continuing the downtrend, breaking the previous low. For uptrend is breaking the previous high, for downtrend is breaking the previous low. So each of these things are all breaks of structure. Some people say BMS, they are lock, but you don't need to confuse yourselves with terminologies and languages when you are right at the end of the day. Break of structure here again, and then another break of structure here again. Right, so that's BOS. Now there's something you need to learn. This I just told you is what I call major structure. Is the outside structure. High, low, high, low, high, low. Now this one I just drew for you here is what we call minor structure. It's anything that happens in between. Now, let me show you one more thing I have not mentioned. I've talked about breaks of structure. I've talked about high, low, higher, high, low, higher, high, higher, low, higher, higher, high, higher, low. Now I need to teach what I call a range. Let me write these things out safe. Ranges. Now this is not the same as ranging market too. Just understand something. But let me even tell you why it's called a ranging market. A ranging market is called a ranging market because it's maintained to one range. But now guess what? Between here and here, look at it too. Between this point and this point, that is one range. Yes. Listen very closely. Between here and here is one range. Between here, between this high and this low that's been broken is another range. Sorry. Between this high, so you have high, low, it breaks between this high and this low. Between this high and this low. Between this high and this low. This is a range. This high gets broken, break of structure. Between this high and this low, that is another range or a point of structure. Now, this is a high, this is a low. That's broken this. Now, between this high and this low, wait, see, this one has been broken now. Now we're looking for the next retracement. The moment it begins to retrace, now we have a new high. And between this high I just drew now and this low, we have a new range. So anything that happens inside of this range is a minor structure. Anything that happens inside of this range is a minor structure. Anything that happens inside of this range is a minor structure. Sorry, inside of this range is a minor structure. Anything that happens inside of this range is a minor structure. Do you understand? So if, for example, this is the 4-hour time frame, if you drop to like the 15-minute time frame, which is a smaller time frame, what you will see happening here in all these places will be something like this, because it's a smaller time frame. So there are downtrends in these points, right? And then there are uptrends in these points on the lower time frame. There are downtrends in these points like that. You understand what I'm trying to say here? So, but this is lower time frame structure, lower time frame trend, and lower time frame structure. But if on the same time frame within one range, look at it very closely. Don't miss this. Don't miss this. Now look at this. This is a high, low. It breaks it, but this is not a breakout. This is what you call a liquidity graph. I'll explain to that. I'll explain what I mean just now. So you have that. I'm going to explain a law for you now. And then that's breakout structure. Then there's this low. Then you mark your high. In between your high and your low is your range, right? Now within this range, every other structure that happens without breaking this or that is what we call a minor structure. So you have this one, you have this low, for example, you have this high, for example, you have this low, for example, you have this high, for example. All of them are minor structure, and basically they are not as strong as your major structure, which is outside here. Let me use an oval shaped. These are your major structure points. I'm using the oval shaped thing to mark your major structure points, while the green is to mark the minor structure points. So for example here, this is a new range price. This is your high. Mark your high, mark your low, which is your low here. Every other thing that happens in between this range is minor structure, and this is what real life markets look like. It's not fake. This is a minor structure. But everything on the outside is major structure. Everything on the outside is major structure, right? Everything on the outside is major structure. Everything on the outside is major structure. Do you understand? So everything inside within a range is minor structure. Everything outside a range is major structure. So let me find an example for you. Let me close this, for example. Let me zoom it in. Let me zoom. Great. So I've seen some minor structure and major structure. So if you're looking at this, look at high, look at low, look at high, look at low, right? Now see very closely. You can see this range, I can see this retracement, right? From this point up to this point is major structure, and then it came down. But you can see there's 2 points I did not mark. Those were minor structures. So this, and this would have been minor structure too, but if he had not caused the break of this low. The fact that the break of the structure of the next major structure came from here now makes that one external structure, right? Makes it external structure. That's not even the main one I wanted to show you. So the next one I can see from here right now is this, all these plenty things that are happening in between this range, because it's still within the range. And what is the range? The range is, after this breakout structure, the high and the overall low. Every other thing in between this range is minor structure, minor structure, minor structure, minor structure. Everything in between is minor structure, minor structure, up until this one, because this is now the low that caused the break of the previous major structure. So it will carry a solidified point, and this is now a major structure point. Do you understand? So now this obviously is now your next major structure point. Now it has come and it broke below this. So structure can be very confusing, but if you don't sit down and actually watch, and so some people skip levels of structure. That's why I don't like the subjective definitions. You need to know how to define structure. Now, so let me give you the law I told you I was going to give you. Now, here's the law. If you're looking at structure, 1, 2, 3, 4. Once you have two breaks in a particular direction, break 1, break of structure 1, break of structure 2, you're officially in an uptrend. Can you hear me? You're officially in an uptrend. If price comes and breaks once below, just once, meaning it broke below the low, as if you want to start a downtrend, you are still not in a downtrend. This can be a liquidity grab, or sometimes you can call it a continuation BOS, but let's call it a liquidity grab. A liquidity grab. Now let me tell you why. Because if you are truly in an uptrend, what will happen is after it has broken down once, it will continue the uptrend, right? To continue the uptrend. Now here's my rule, the one that I actually use myself on my day-to-day trading. So when you see two breaks in one direction, two breaks, let me write it out. Two BOS in one direction is a trend. I'm not saying a new trend though, it's a trend, right? The trend has started. Two breaks in one direction. Let me say this is the beginning of price. Now listen very closely. Let's say continue. I want to teach you what you call a change of structure now. A change of trend or a change of structure. And then it continues the uptrend, right? It continues the uptrend. And then it does it again. It takes just one out as a liquidity grab and then continues to break structure again. Now, here's when I'll consider it a change of trend. Listen to this rule. Listen to this rule. Now remember this. I want to mark out my external structure. External structure. That's the lows. External structure. The lows. External structure. Even though it got there was a liquidity grab, it's still external structure. External structure. External structure. External structure. So at this point in time, wherever price is right here, this, where's my brush tool? This right here was the last low. And this was the low before that low. So my rules stay based on testing and mechanical trading. State that until price has found a way to either break two previous major lows, either once like this, either once like that, or even if it had to come with multiple moves like this, I won't consider this move a change of trend until these two previous lows have been broken. Write it down. Change of trend equals to break of two previous structural, let me see, major structure points in the opposite direction. I'm teaching this one before chart patterns very intentionally, in the opposite direction, right? Change of trend equals to break of two previous major structure points in the opposite direction. So by the time price does anything, all the shenanigans it wants to do, and then breaks one, breaks two, automatically I'm now seeing myself as, okay, now we're in a downtrend, and then I'm considering this catito major structure point. That's a major structure point. Yeah, that's your high. Then this low didn't really do anything. This is the next high, that one right there. Then this is major. This is a major structure low, major structure high. That's your lower high, and this is the one that finally breaks below the previous two. So this carries a very strong point. And if I want to begin to look for trades, I begin to look for trades from this point. But that's not the important part now. I'm just trying to give you the anatomy of structure for you to understand structure. So I've given you two rules. So listen very closely. Two breaks in one direction start a trend. Right? Start a trend. But if there's already a trend in motion, to change it, you need to break below two previous structure points in the opposite direction. So now let's do a downtrend example. Remember, price does not always move perfectly. So have a downtrend. Sometimes it's giving a minor structure. Sometimes it would even go up and do something like that. Remember, if it's just one break, the trend has not changed. Trend has not changed. It's doing different things, 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 doing different things. At this point in time, let's mark this one out. Let's mark it out. Let's see if you know, if you've been following me so far. So you have your high, and then you have your low, or your lower low, sorry, because there was a low before it. There was a low here, and so this is your lower low, right? So all these ones now, they are minor structure. This is minor structure, The green is a minor structure. This is minor structure. Mark it very well. So you're not supposed to skip any level of structure. People that will skip structure points and be drawing, that's a level of structure. This is a level of structure. But here's the thing. This particular level of structure caused the break of the previous major structure. So if it was to continue, I'll be looking at this point as my next solidified point. But guess what? It is still a liquidity grab because it's just once, right? Now, it continues and this is a major structure point. Because what happens next was it came and it broke previous structure point. So for you to be a major structure point, you have to break previous major structure point. Let me add that rule. Major structure point equals to cause of break of previous major structure points. So if a minor structure point causes the break of a major structure point, that minor structure point becomes a major structure point. Follow me very closely. So these are minors, these are majors, and then we come down. This is your major structure point because this major caused the break of this major. This is your new lower low, and then we go again. It forms this one, right? Forms that one, but guess what? We have minor structure here. Minor structure. This would have been minor structure, but guess what? It caused the break of this major structure point. So right now, this is now your new major structure point. Right? That's your new major structure point. So we'll continue the journey. Major structure point. Your new lower low. Major structure points. Your new lower high. Major structure point. It caused the break of the previous low. Major structure point. Always mark your breaks of structure. Breaks of structure. Then we go again. Major structure points. Right? Then you can see some minor structure in here, but this one caused the break of the next major low. So this again is a major structure point. You can see the trends and how it's going, right? So now, how will we know a change of trend? How will we know a change of trend as at this point in time? Let's say it moved one more time to the downside. Now, for you to confirm a change of trend, remember I've said that even if it takes it out. Okay, sorry for the break. So major structure points, major structure points, major structure points, major structure points, major structure point. So how do we confirm a change of trend? This is very important. Remember, change of trend is very important. Now, for you to confirm a change of trend, you have to break the two previous major structure points, which are this one and this one. Does that make sense? Does it make sense? So now, for price to confirm a change of trend for us here for us to begin to look at maybe it's changing to an uptrend, it has to do this. It's to go back above this. It can break it in one move, and then we're already like, okay, great. Now we're expecting to continue to go higher. Can do this. You can do that actually, but also you can decide to do it in multiple moves. So it doesn't matter if it's one move. Now remember I said two breaks in one direction start a trend. Now, even if it breaks the two previous levels of structure, major structure, once, we're still expecting that, okay, that's a change of trend to continue upwards based on study and data, right? Now, also, it can be more convincing and do something like this. It will start and break the first one, or I may do this. We break the first one, just the first one, then it give you two breaks to confirm. It's making like more convincing, you understand? So now it has, look at this, look at this, this is actually a minor structure point right here. Minor structure point. This is a minor structure point. This one breaks this one finally. Okay, this one causes the break of that one, so it's no longer a minor, it's now a major. It's now a major structure point because it caused the break of this guy right here. Right? So now you have your new high, and then we're still waiting for the break of the second one for us to confirm that we're now in a new trend. Now, until that break happens, we don't begin to look for buys. We're waiting, we're very patient. Now we see a new change of trend. Now guess what? Now we're looking for the bullish move upwards. Now let's study our chart actually. So let's clear all this. Okay, let me to clear share. Let's remove all these things. Let's look for how at the time when I'll begin to look for a change of trend. Let me give an example right here. So zoom in, zoom in, zoom in, zoom in, zoom in, zoom in, zoom in. Don't I need you to always zoom in, don't always skip levels. So price is coming very impulsively, and I've explained what impulse means, right? So you have this high, you have this low, you have this high, you have this low, you have this high, you have this low, you have this. Those are small points of liquidity, small points of structure. I mean, you have this. Sorry about that. You have this high, you have this low, you have this high, you have this low, you have this high. Let's pause here. So at this point in time, where were the two previous points of structure, like previous lows? Because we're in an uptrend, you're looking at two previous lows. Here, major structure low. Here, major structure low. So by the time price came and broke this, I was not looking to start to sell immediately. No, because I've been in a strong uptrend. You don't want to go against the trend. I'm still looking for buys, and it's okay to be right 99 times and then wrong the one time, right? It's okay to be wrong the one time, as opposed to being wrong 99 times. You're trying to sell, you're trying to sell, you're trying to sell, and then being right once. That's a reversal trader. They always try to catch the reversal, catch when you should just follow and continue. Then when you eventually get wrong, that's your one time you'll be wrong. So it broke here and it didn't give me a sell, so I'll be waiting. Watch you. I'll be waiting. Now it's already forming new structure points. It's already forming new structure points. But it has not broken my previous one, so I'm still waiting. It's already forming new structure points. It's already forming new structure points. That's a high, that's a low, that's a low, that's the high. It's forming new structure points, so that's not broken this one here too. Can you see what's happening right here? Now this is my actual level that I'm waiting for to get broken. Until this gets broken, I'm not really in. I've not seen a change of trend yet. Now see something very funny happens here. Now see something very funny happens here. As at this point in time, listen very closely, listen very closely, listen very closely. As at this point in time, listen very closely because structure can be tricky. You have to learn these rules and then you have to practice them to master it. As at this point in time, between here and here, guess what happens? This was the previous high, and this was the previous high before that. Right here and right here. Remember, we were in an uptrend before. Started to see like something that wants to show as if it's turning to a downtrend, but it has not broken the two previous lows, so we're still waiting. So basically, we're not taking any trades here. But then the two previous highs on this downtrend, this small downtrend, has not confirmed yet. Price decided to break above it, giving us the feel that okay, now we're switching back to our uptrend, right? Because that's broken above the two previous highs that's been causing this downtrend. So we have switched back. Now I'm already waiting for opportunities to sell. Sorry, to continue my buy. To continue my buy. When I see what price does. Price now goes and breaks this one. At this point in time, it is no longer valid. Let me explain. Why it's no longer valid. Because that's broken these two previous highs, and then we're kind of forming a new trend here. Guess what that price has done now? Price has done this. It has broken once, it has broken twice, then this is a low, then this is that. So right now you now have a new two previous lows. You have new two previous lows. So price now decides to break these two previous lows now with this move, and then giving us that okay, maybe now we're in a downtrend with this one, maybe you can begin to look for sales here between these small moves. But just when you are starting to get comfortable with the new trend, price says no, I want to go back to my uptrend, and then it goes back and breaks the two previous highs to confirm us back into the uptrend. That's why you have to be very patient and watch price very carefully. It breaks it with one move, with just one move. Has broken the two previous highs again. So sometimes you like the way you describe this is what I basically call this a range market, because it's just going up, down, up, down, down, up, down. It's not clear, right? So you basically just be patient in areas like this. The moment it breaks these two previous highs again, now we're looking for an opportunity to continue our uptrend, and it has given us a perfect movement to continue to buy again. And you can see, for those of you who know other blocks and all of these things, you can even begin to look for trades already. Like here you can see look for a trade there. Here you can look for a buy there and continue your buying to the upside, and it continues that way till up until this point, right here, when it broke that one finally. Now so at this point in time, this was the last previous major structure low, and this was the second one behind it. So these were the last two previous major low. For this to confirm that it has turned downwards and become a downtrend, it has to break these two first. Until it breaks these two, it is not confirmed. So by the time it breaks the first one, which is right here, so all those are minor structure. I told you, if you can avoid minor structure, you avoid a lot of losses in your life. Minor structure, minor. This is minor structure. No, this is not minor structure anymore, because this was now the structural high that caused this leg, or this range, this leg of, like I've told you about legs. This is a leg, this is a leg, this is a leg, this is a leg, this is a major leg, the major leg, minor leg, minor leg, minor leg. Then this is a major leg again that is coming down to break this major leg. It's only a major leg because it broke a major leg. So now it has broken the first one while watching. It continues with just one move and breaks the second one. Now we're sure that we're in a downtrend. Anytime a sell opportunity comes, we'll begin to take it. Now instantly it begins to drop crazily. You can see now it has turned to a downtrend. It's now just going like water. It's going straight. Like I'm beginning to take trades. For example, those of you who sorry about that. Those of you who like trade off OBs, you can see your setup here. Then more trades are just forming back, left and right, back to back, straight, back to back, back to back. So it breaks it once. I told you, if it breaks it once, it's a liquidity grab. It's not anything. Just look at it and continue. Just wait for an opportunity and continue to trade. It breaks, breaks. Here, it breaks it twice, but it doesn't break the two previous. So we're still in a downtrend, and then it continues. Look at these rules. These rules have been forged from actual data. Sometimes it break twice, but it has not broken the two previous major structure highs. So you still continue your downtrend, and that keeps you safe and keeps you correct and in the right direction. Price continues to do its thing, and it's still dropping. It's still doing the shenanigans. One break, liquidity grab, you can continue your sell, and then it continues downwards, continue to go downwards, continue to go. You'll never see a place where it will break our rules of breaking two and then just continue. It's very rare. It's very rare. And then it continues to do what it's doing until what did I say? Forms 2 points. What are the two previous highs here? Two previous highs. So you have this one, and the one above it, which is like here, because they are like basically on the same level. This one and this one, those are the two previous major highs. Two previous major highs, right? Two previous major highs. So for price to confirm a change of trend, it has to break these 2 points. Now these are minor structure. This one becomes major structure because it breaks the previous major structure. But because it has not broken this high yet, we're still unconfirmed if we should switch to a buy or we should wait. So we're waiting. Now price does this. It breaks down below this, and we're still watching. We're not looking for any trades yet. Then what does it do? It decides to come up here and break our previous major high, kind of telling us that okay, maybe I want to switch. But what does it do? It doesn't give us an opportunity to continue. Rather, it breaks down again with all these. Let me draw them out. Let me mark them out for you. Minor structure. This is how you can read price. Clear as day. Minor structure. At this point, you are waiting patiently for your setup. Maybe you take a loss. I told you a few times you take a loss and then that you're good, but majority of the time you'll be right. And then what does it do again? This is not minor structure because it is causing the break of the previous major low. Now, at this point in time, this is a major low. Remember, major low. So anything that breaks it becomes a major low, a major structure point as well. So now this one that caused the break of that low, the leg that caused the break of the previous major is a major high as well. Now this breaks this. Now remember, as at this point it has broken two previous major highs. Guess what? It has formed two previous major lows, which is right as at this point in time. It is here, and it is just say okay, that yeah, it has to be here. This final one right down here, because these ones are minor lows, right? That should be there. So listen very closely, here and here. So basically everything happening here, we're just being patient while waiting, because now it has not given us a clear direction. You told us that you wanted to go upwards. Now you have broken down again. So where do you want to go? You have to wait for those two previous major lows or two previous major highs to get broken first. So now at this point in time, we're waiting. Now price comes down here, and then it breaks the first one. We're waiting. It comes, it does its thing, and then it breaks. It has broken it now. telling us now that what we're continuing the downtrend we were in before. So all this one here, there was just a ranging market. I told you what a ranging market is. It's going up, down, going up, down, up, down, up, down, just breaking up and down, not giving you any clear direction. And what do you do in ranging market? You avoid it, you stop doing what you're doing, just watch it and allow it come out of it. Now that it has broken below the two previous lows, giving us a clear direction of where it wants to go to, that now we're ready to sell. Now we can begin to look for our sell opportunities again. Now this is now our new major high and our new major low, right? And our new major high right there, just like that. So definitely we're looking for a continuation to the downside of whatever price is doing right here. I believe I've extensively talked about structure and trends in this particular video, and I'll appreciate it if you can do this following task. Let me see how long I've been here. 45 minutes. Okay, what else have I not talked about? I'll need to have a session 3 for this one now then. God damn. So I've talked about chart. I've not talked about chart patterns. Yeah, I've talked about trends. I've talked about structure. I've talked about liquidity. I'm not talking about liquidity. I'm not talking about okay. Very nice. In the next one, I'll talk about liquidity and liquidity grabs, and then smart money concept. I'll tie all of them together. Okay, great. Now let me talk about chart patterns before this video hits 1 hour. Great. So I'm going to teach you only 4 chart patterns because those are the only ones you need. The rest are useless and pointless, and they don't work. Right? I'll say it like that. Pointless, useless, no need to learn them. Learn only these 4. The first one I'll teach you is double top and double bottom. Double top is simply when you see, know how our structure is now. You have your higher, let me do a downtrend. Your lower, your low, your lower low, lower high, lower low, lower high. If you see this, 2 highs that are on the same level or almost on the same level, right? And then price continues to go down. This right here is a double top. And the only reason why I'm teaching you double top is because it has a significance in smart money and institutional trading. And you can tie it in with structure. You're not supposed to find a double top anywhere, anyhow. Only look for double tops in a downtrend because it's a moving, it's a circle that tells you that price is going down. So only look for it in a downtrend. I'm going to make a full strategy, a full mechanical system out of this thing I'm teaching you right now in session 5. So watch very closely. Now, second chart pattern I'm going to teach you is a double bottom, also called a W. So you're looking at, let me draw it here. You're looking at an uptrend. Once you see a low like this, and then price breaks, and then forms and comes all the way down, this is like a full 100% retracement to the same level or close to the same level without the wick or the body, and then does this, you're expecting to do that. That's what I mean. So this right here is a double bottom. A double bottom. This is a W and this is an M. Chart pattern 1, double bottom. Sorry, double top. Let me write it out. Double top. Double top. These are, we're getting into strategies on how to actually trade. Now, chart pattern number 2, double. Hey, why don't I want to write double bottom? AKA W. Right? This was double top. AKA M. Right? That is it. Great. Now, I'm going to show you on the chart shortly. The third chart pattern I'm going to teach you is what we call a head and a shoulder. Head and shoulders, head and shoulders, head and shoulders, head and shoulders. Look at it very closely. It looks like, let me show you what it looks like. It looks like a small small shoulder, the head, and then another small shoulder, and then it continues to go down. Now, the head and shoulder pattern is a down moving pattern. Very good. The inverse head and shoulder is like this. Small shoulder, the head, small shoulder, and it continues to go up. Now, how are you going to apply this? Never look for a head and shoulder in an uptrend, because now you're looking for reversals. Don't do that. Only look for a head and shoulders in a downtrending market. And when I tie it eventually to smart money and institutional trading, it will make a lot of sense. For those of you who want to trade retail, please just follow me on this. And if you are trading inverse head and shoulders, only look for it in an uptrend. So let me explain. Let me show you what it look like if you're in a trend. So we're going in a downtrend, for example, and then as I said, it is what? Small shoulder, right? Head goes above it, Small shoulder again, then drops. The way they usually trade it is they will draw this thing called a neckline, right? Called a neckline. And once price breaks the neckline, they will sell here and then they'll put their stop loss. Where's my that short position thing? Once it breaks the neckline, they'll put their stop loss above this small neck and then take their profits something like 1:1 down here somewhere. Do you understand? Right? I'll explain it in greater detail later. I just want to show you something. And when I'm teaching the strategies. So now that's your head and shoulders. For your inverse head and shoulders, you're looking at an uptrend. Price is going upwards, 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 upwards. Now what you see next is um you see let me draw it again. Basically that what I just drew. I've drawn it already. But let me draw it well. How's it gonna be now? You see a small shoulder, listen very closely. A small shoulder, listen oh. You see a big head, you see a small shoulder again, and then you're waiting for the neckline to break, and then it goes higher. And listen very closely. This is your inverse head and shoulder. They draw a neckline at the bottom, and then boom, you can enter the trade and you buy. That's the conventional way they teach it. The way I'm going to teach you to use this thing, it's going to be slightly different. Because sometimes even your double top and your double bottom, they tell you that wait for the neckline to break before you enter. Who want to do that rubbish to now? The fact that you're aligned with the trend gives you an opportunity to enter at the top right here. The fact that you're aligned with the trend gives you an opportunity to enter at the bottom right here. For head and shoulders, the fact that you're aligned with the trend gives you an opportunity to look for your trades around here. Especially if this one comes slightly below the previous low. You use what we call a Fibonacci. That's where your Fibonacci will come into play. You literally draw a Fibonacci like this and use your Swiss for 50% or 61.8. I'll teach you in greater detail. Don't worry, I'll teach you that. I just want to show you chart pattern, right? Then it will drop from there, blah blah blah. Continue the same thing here. You especially if this low goes above slightly the previous small shoulder, then you can look for a Fibonacci here. Where's that Fibonacci? Draw to the point here, and on the retracement you can get your buy. These are the only 4 chart patterns I'll be teaching you, and I've shown you what it looks like on paper, and let's look for them on the chart. Let me delete this one first so it's just stopping me. Now on this my uptrend I've marked, let's be this now, sorry about that. And this my uptrend let me use this let me use this uptrend. Let me zoom it in very well. So you're not always going to get your double top and your double bottom, but they will actually occur a lot of times, right? So let me show you here. So right now, here, we're in an uptrend that's broken above the previous 2 highs right here, right? So here, look very closely. Look very closely. Oh. High, low, high, low, high, low. What did you just see? What was that just now? Was that not a double bottom? Okay, let me pause. That's the bottom right there. Next one. Price continues. It breaks again. What does it give you again? Another bottom. And now set up for another opportunity for you to enter. It breaks again. What did they give you again? See, they don't have to be perfect. They don't have to, just look at the level of structure. That's why I say structure is the most important thing for your chart patterns to work. Look at your level of structure. You have this low, you have this low. Even if there's a wick below it, it doesn't matter. Look at it there. Double bottom continues to fly and price moves. So basically, you're looking for the impulse, the retracement, and then you're looking for your first leg, second leg, boom, you're gone. And then price continues to go up. This high, this low, this high, this low, this high, this low. I'll pause. Look at this. Look at this low. Look at this one. The wicks align. I don't like this very dark shaded. Let me look at the default one. You see, the wick, see, as far as your wick does not close below this previous one's wick is valid. You can continue to, and I've not taught you strategy yet, so you don't even know how to enter. So don't go and rush and be doing nonsense. You understand? So basically, I'm showing you that these things happen in an uptrend, and if you capitalize on this, you win a lot of trades, right? So that's double bottom right here, still on this trend. Now we're still going though. Are still going. Now we're now in a new range structure. That's broken this one, that's gone. Guess what? Again, another double bottom right here. You see trades you tire. This week to this week, guess what? If I've taught you how to enter the trade, my battery is low, bro. I have to cut this system. I have to cut this session very quickly. It gets to the second leg and boom, double top again. It works another time, and then structure continues, minor structure, minor structure, finally breaks above, and then we're waiting for our double bottom. It does a stupid minor structure here, and then guess what it did again? Double bottom again here. Continues to amaze and still give setups, right? Until here when it finally fails. But really, if I teach you the setup, if I teach you the system, you really not try to enter here because there's no entry criteria here. So it breaks. Sorry, what's this thing disgracing me now? Sorry. It breaks here, and then that was where that place I was trying to analyze what price was trying to do when it was trying to like switch structure and all of that. But basically, here, now that that's dropped to a kind of a downtrend, kind of looking for double tops at that point in time. So if you had entered, let's say somewhere here, probably you'd have almost taken your profit before price reversed and turned again and continued the uptrend. Now uptrend has come back again. You're looking for what again? Double bottoms. And if it doesn't give you anyone, you wait until you see one, and doesn't give anyone till it switches back to a downtrend. And now we can see there are plenty double tops here for you to capitalize on as well. Double top, they are so countless, they are everywhere. Now for the head and shoulder, that one may not be as replete as the double top and double bottom, so that's why I'm not even giving you a strategy based on that one. So you can decide to use the base. Then let me be like, I only taught you one thing and then I'm like locking your brain. I'm not allowing you to see the other aspects of trading, right? So you can use that pattern and go and find it if you can find it, and then create your own system. But personally, the double top and the double bottom are like the easiest, simplest, and the best that you can use. Do you understand? But if I was to quickly look for an appearance of the head and shoulders right here, I think I found one already. Yeah, I found one already. You can see it right here. So I don't want to confuse you, so let's just leave it at the, let's say I taught you only two chart patterns, because the head and shoulders will confuse you. It will confuse you. So let's just leave it at that. So double top, double bottom are the only two patterns I taught you. I showed you the inverse head and shoulder and the head and shoulder, but either ways you're not going to use them, so forget about it. When I teach SMC, the head and shoulder will look more like the SMC system, so then you can learn it properly there. So I've taught you the double top, I've taught you the double bottom. I didn't teach you any entry criteria. I just taught you chart patterns. I taught you only two. Please, you don't need rising wedges, you don't need falling wedges, you don't need triangles. Let me show you how many chart patterns there are. Not to not be as if I'm just talking chart patterns. You see so many nonsense that will confuse you now. Very good. See. Imagine you have to learn all these things. When will you succeed? How will you succeed? See patterns now. How will you succeed? How? Can you see? Someone's even selling itself. Sounds rubbish. Let me show you something. Let me see if I can zoom into anyone. I need one that has plenty. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. When will you succeed? Just pick two. See the way they trade their double top. I told you they are using as a reversal pattern to break the neckline. They will now retest. Yeah. Just simply look for your double bottom in an uptrend, double top in a downtrend, and you're good to go, my dears. Just trade just those two, and you're fine. You have nothing to worry about. That's just the two things you need, and that's it, basically. So I think we're done for this session. We talked about a lot. We've talked about a lot of things. We've talked about structure. We've talked about ranges. Talked about legs. We've even covered two chart patterns. A lot of things. So, what task will I give you now? Okay. So, what task will I give you now? What task will I give you now? Let me first of all look at my battery. I have just 15% left. Okay, for the task for session 3B, task for session 3B. I'll need 5 charts, right? 5 separate charts. See, 5 charts. It can be Euro USD, NZD USD, GBP USD. Just 5 separate pairs, 5 separate charts, where you mark out. Listen, oh, 2 uptrends and 2 downtrends. So that means you take Euro, that means 10 in total. You take Euro USD, you find an uptrend for me, you mark it out, like you mark it, breakout structure, high, low, higher, low, like that, like that, like that, like that. Then you mark it downtrend. Okay, now let me make it 1 1. Sorry, 1 uptrend, 1 downtrend, right? On 5 charts, so that's 10 in total. Then number 2, show me 5 examples of change of trends. You know what I mean by, right? Following this rule that I gave you, that until price has broken the previous two previous structural points, that has not changed yet. So like here, when that change occurred, you just take a screenshot of this, like screenshot of when price changed trend, and that's all I want you to show me. Screenshot of when price changed trend, like at tops and bottom. Like you find them usually at pivots. Pivot is usually when price changes direction, right? You find them at places like this, right? So that I'm gonna, like, this is one example. This is one example of a change of trend right there. Like when I drew it here, it's one example of a change of trend right there. So that's your tax number 2. 5 examples of change coming from one chart, coming from 5 charts, one each, your choice. Then what else? I need you to show me 3 double tops from the charts. Double tops, that's your M, and 3 double bottoms. I'm not going to ask you about inverse head and shoulder because I don't use them and you don't need them. Forget about them. And 3 double bottoms, that's your W. And then tell me the rule. The rule for using double tops and double bottoms. The rule is simple. Only use double tops where, and only use double bottoms where. I said it in the training. So that's about all I've covered here, and I feel like I've done quite a lot here. Structure, trend, solidify structure point, minor structure. Yeah, so when you're marking your structure, please indicate the minor and the major with like 2 different marks, so I know the difference and so I can see it. So I'll have to do a lot of marking here though, but I'm fine. I mean, I have to do a session C for technical analysis. It's crazy, but I'm down for it. I'm down for it. I'm down for it. So this is your task for session 3B, and I told you only those who complete all my tasks get my gift. So if you're not doing it, forget about it. Forget my gift. Forget my $5,000 funded account. Forget about it. Thank you very much. So your task 1 is 5 charts, marking out 1 uptrend and 1 downtrend each on each 5 charts. So that's 10 in total. Then show 5 examples of change of trends. Then 3, you show me 3 double tops and 3 double bottoms, which are the chart pattern I showed you. Then write out the rule for using double tops and double bottoms, which is only use double tops where and only use double bottoms where. So the fact that you can show me a change of trend shows me that you know the rule for a change of trend, right? So I want to see how you guys will mark out your structure. Remember, don't skip points. Do not skip structural points. Don't skip structural points. Don't skip structural points. If it breaks a point, mark it. If you see all these small dots above and below my structural points, is an indicator called fractals. I use it to aid me, but I don't want you to use it yet because I already know how to mark distance, right? So don't skip structural points. Mark everything you see. 1 1, and that should be 10 in total from 5 charts. Thank you very much for sitting through the session. Let me see what's going on here, if I can find the setup to trade here. Yes, I was looking for this break to happen since. Now I'm looking for a buy. You know why? Why am I looking for a buy? Based on what I just taught you just now. I know we're in a downtrend because of this big move. It took the previous two major structural lows. Yes, you can see that right here. It took two previous major structural lows. So we're like, okay, now we're looking for a sell. But guess what? It made a new structural point. Okay, great. Now this is the previous high and two previous highs, two previous major structural highs, and then it broke it back again, telling us that whoa, oh, now it's bullish again, right? Now it's bullish again. So I can begin to look for buys, right? And now based on my system, I don't trade off of levels, I trade off of liquidity grabs, which is what I'll talk about in the next video. So from this point on, I can begin to look for trades, or even if it drops even as low as here, it's still valid for me to look for trades to take this guy back to the top where it belongs, right? So I'll be waiting. Let me see what it does, and let me look at the 3 minute time frame to see structural points, because I enter on 3 minutes and 5 minutes sometimes. But here, structure is looking good. Either ways, thanks for watching. See you in the next one.